They have done it. After falling to third place in the race to be the most valuable company in the world, Apple surged back to number one briefly today. Apple's surge began yesterday, climbing 7% in a single day and continuing seemingly uninterrupted throughout the day today, getting as high as $220.18. That was until about the last 45 minutes of trading today when a broader market sell-off sent Apple down along with it. Apple still finished up just under 3% for a 2-day total gain of over 10%. The reason for this Nvidia-like climb? Well, it seems that Apple is officially an AI company. Welcome to the Quality Investor. Apple was left for dead earlier in 2024. As low as $165 less than 2 months ago on April 19th, they have climbed almost 30% in 7 weeks. Many on Wall Street and social media were questioning whether there was any growth left in the tank. A storm of negative sentiment was sweeping through the stock. Late last year, headlines bandied about the idea that China had banned iPhones. Then as actual numbers came out, we saw sales slow to 2% year-over-year growth in Q1 and fall 4.3% year-over-year in Q2. And some research firms even reported that iPhone sales in China fell 24% year-over-year in the first 6 weeks of 2024. Apple Vision Pro proved to be a dud as sales slowed quickly after release. Apple scrapped its plans to build its own version of an electric vehicle in February, and governments around the world started piling on Apple's woes. Apple was fined $2 billion for supposed antitrust violations in the European Union. Just a couple weeks later, the United States Department of Justice launched its own lawsuit against Apple for its alleged monopoly of the smartphone market. I did a video on why that lawsuit is frivolous at best. Before getting to the rest of the video, please remember to like this video below and subscribe to the channel so you can stay on top of all the quality businesses in the market. The market had seemed to give up on Apple after the flurry of bad news. Down 14% year to date at one point, it seems that their time as king of the market was over. Even Warren Buffett sold some of his shares before the Berkshire annual meeting. The growth was dead, they said. Apple was now a stalwart, being left behind in the new golden age of AI. Their fiscal Q2 earnings report left a lot to be desired. Sales, profits, and free cash flow, they were all down year over year. But there were some sprinkles of hope. Operating and net margins were actually up. Earnings per share actually increased. And Apple announced the largest return of capital to investors in history, a 110 billion share buyback program. That, along with a modest beat on their earnings, sent the stock soaring 6%. The tide has seemed to finally start turning. Since that earnings release, Apple's share price has been a very steady climb, sitting at $173 just before earnings. It closed out at $193.12 just 2 days ago. So what happened that launched Apple's stock to new all-time highs? Apple's Worldwide Developers Conference happened. They released a slew of AI enhancements to their suite of premium devices. They revealed a partnership with AI darling OpenAI. Now Siri can tap into ChatGPT. Apple's own iteration of AI, known as Apple Intelligence, has seemed to re-energize investors. There are all sorts of features around the new AI, but I'm not going to discuss them in this video. I linked to a video below from the Joseph Carlson show. He went into how all of these AI enhancements actually affect Apple's economic moat. I highly recommend it. It's a very detailed video. What I want to discuss today, though, is their surge in the share price and to see if it's actually justified. What is Apple's value right now? And is it worth buying after its surge of the last 2 days? To be clear, many of the AI integrations won't be available until fall of 2024. This coincides with the newest iPhone release, the iPhone 16. Here's the growth catalyst. It seems Apple devotees, me included, have a real reason to upgrade our device. Additionally, this could bring in new customers to the Apple ecosystem as their AI offering will surely be the best the smartphone market has to offer. There is a real growth story for Apple now instead of just modeling in a 3 to 5% standard growth. at best. This will help other devices such as the MacBook and iPad as well. These sales have been stagnant. Just as an example, I bought a new iPad Air yesterday. I've been toying with the idea for a while now, and Apple finally gave me a reason. What's even more impressive from an investor's perspective is that these AI enhancements will only be available on their premium devices. I specifically bought an iPad Air because that and the iPad Pro use the M series chip that is capable of integrating its AI. Their regular iPad does not. The same goes for the iPhone. You must have an iPhone 15 or greater. I currently have an iPhone 13, and I skipped the upgrades to 14 and 15. Now I have a reason to upgrade to the 16, and I will. This is the innovation in the iPhone that people have been clamoring now for the last couple of years from Apple. And with sales declining as well as market share taking a bit of a hit, especially in China, these new AI enhancements will continue to position Apple as the premium device and worth the price tag in markets across the world. Apple excels at taking existing products and making them even better, making them even more aesthetically pleasing and useful at the same time. I believe they will do the same thing with AI. Tim Cook, the CEO, stated that our objective is never to be first. Our objective is to be best. Apple does this better than anyone. Apple is officially an AI company now. They are on the wave with NVIDIA, Microsoft, and Google, and they are making a play for first place in the market cap race, demonstrating they aren't going anywhere. But is it worth it today? They closed the day at $213.07. You can see they shot up for a second day in a row, getting up, scraping 220 before falling down with the rest of the market in the last 45 minutes of trading. To me, this is a great example of hype around a stock. What Apple previewed at the Worldwide Developer Conference was certainly impressive, but keep in mind, they have no sales to back any of that up. Even NVIDIA has the earnings and the free cash flow to back their historic meteoric rise. So really, a lot of this share price rise in the last couple of days is around people believing that Apple will deliver. I do think they'll deliver, but I do want to see some real evidence in their earnings over the next few quarters to justify buying more Apple than I already own. Like I said, none of their AI stuff gets released until this fall. So we're not going to see how it really affects their sales numbers until probably the December quarter of 2024. Before getting to their valuation, I want to point something out here. On the top here, we have their SG&A and R&D total spend. And on the bottom here, we have that margin percent of SG&A and R&D as a percentage of gross profit. You can see on a trailing 12 basis, they had a $30.3 billion R&D spend and a $25.3 billion SG&A spend. Now, obviously, the total spend is going to increase along with revenues, but what's more important here is that margin percentage as a percent of gross profit. R&D's margin percent of gross profit here was 17.4% on a trailing 12 basis. They haven't had an R&D spend that high since the fiscal year of 2004. That year is at 21.7%. The R&D margin dipped a little bit in 2005 and 2006, but in 2007, they released the iPhone. And we can see for years after that, their R&D margin here was less than 10%. It started to creep back up a little bit, and now at 17%, it's up around those levels before the iPhone release. Apple is definitely gearing up for something else on top of their already impressive AI enhancements. So what is Apple's valuation? So right now, based on their 2 quarters of 2024 data, they're slightly behind my year one estimate of revenue by just under 1%. But they are ahead on their operating profit and on their net income. So on their current pace, they'll have about a 31.5% operating margin. They're also slightly behind on my EPS estimate and about 1.6% behind my free cash flow estimate. So the question is, when will we see this growth, and what kind of growth will it be? I don't think we're going to see these growth catalysts that Apple just previewed with their AI in the numbers for 2024. I think we'll start seeing it after 2025. So this is the revenue for each of Apple's segments going back 6 years to 2018. You can see that somewhat erratic growth here in the iPhone. But like I said, in 2024, I'm actually not expecting to see a real uptick in that growth. The iPhone 16 is not coming out until the fall. That's going to be the end of Apple's fiscal year. So the iPhone 16 growth catalyst won't be seen until 2025, where I have a 6.25% growth modeled in. These growth rates are based on analyst estimates and tweaked a little bit on the downward side just to make them a tad bit more conservative. We can see for both the Mac and the iPad, they had pretty terrible numbers in 2023 in terms of growth. The Mac was down 27%. The iPad was down 3.4%. This year, they're actually on track to be down 18%. However, I do believe the iPad will see some real growth after 2025, primarily because I believe AI and their enhancements will lend itself very nicely to the iPad. One of the reasons I bought it was to actually help me doing stock research. I like the idea of summarizing entire PDFs of annual reports from businesses and using the AI to do that. Doing something like that on an iPad is just a lot easier than an iPhone. Not only that, I don't use a Mac for my normal computer. So for me, the iPad's a really good in-between tool. Wearables have also been hurt quite a bit this year. I'm modeling in negative 8% growth for wearables. This is certainly not helped by their very poor Vision Pro sales either. Services though, services is the real bright spot for Apple. It's a little under half the size of the iPhone sales, but it is growing quickly. Not only that, services has about a 73% gross margin. It's incredibly profitable. So the faster that grows, the faster Apple is going to increase their margins. And as that margin increases, that's also going to increase their return on invested capital, which will in turn increase their cash flow. So the services, I think, is going to be a bright spot going forward as well. But on my base case, I am modeling in a pretty modest 11% in 2024 and a 10% in 2025. 10% in 2026, and I have it tapering down to 8% by year 10. For context, that's about half the growth they did in the last 5 years. At 16% growth the last 5 years, my compounding annual growth rate for the next 10 years is about 8.7%. Here are all the assumptions I'm using for each of my cases, bear, base, and bull. I'll start on the bottom chart with revenue segment. I already pointed out the base case, so iPhone I have growing about 4.8%. For the next 10 years, 2.7% for the Mac, 1.5% for the iPad, 1.6% for the wearables, and about 8.8% for services. It's in the bull case where I think I'm trying to model in what that growth is going to be. But if we're being honest here, if we look at the last 5 years for the iPhone, for example, it's only grown at 4% compounded annually. It still remains to be seen how fast this AI catalyst is going to be for Apple. I want to wait for the real numbers, but we're not going to really get a good picture of what the growth is going to be like for Apple until the end of this year, December of 2024. And even then, that's going to be only 1 quarter of data. So I'm trying to balance being conservative and optimistic on my bull case for their growth. So for the iPhone, that's at 6.5% over the next 10 years, 5.5% for the Mac, 4% for the iPad, 2.9% for the wearables, and 11.3% for services. That would be total revenue growth of 7%, which would essentially be what their revenue is for the last 5 years at 7.6%. And you have to remember, it's incredibly difficult for a company that is the size of Apple, over a $3 trillion valuation, to keep up this level of growth at 7.6%, to continue that same level over the next 10 years. So coming up to the growth assumptions on the top chart here, I want to say that I'm using an operating percent margin for year 10, 38% for the base case, and a 41% operating margin for the bull case. Here, I'm really baking in the idea that the services are going to grow much faster than all the other segments, and they're very profitable. So that's really going to send the operating margins much higher as those services grow. I'm keeping their interest expense margin pretty much in line with what the year 1 estimate is. Same with taxes, pretty much in line with your year 1 estimate. For free cash flow conversion, I have $1.05 this year 1, increasing to about $1.08 on my base case and $1.11 for my bull case. And of course, their share repurchases, Apple's great share buyback program. I have the estimates there. Their dividend, however, is a very slow growing dividend. Depending on what numbers for inflation you use, you can actually argue their dividend is growing slower than inflation. But really, Apple prefers to do share buybacks. They just announced that $110 billion buyback. That's how they prefer to return capital to shareholders. So what this all translates to for my estimates at year 10, I'll start with the free cash flow margin here. So I'm estimating in a base case that the free cash flow margin will expand to about 34.8%. And almost 40% on my bull case at 39% here. their trailing 12 free cash flow margin is actually 26.7%. So you can see that's a pretty large expansion in free cash flow. A lot of that I'm anticipating is going to be driven by services growth. And finally, for year one estimates, I do have $386.9 billion in revenue, $119.9 billion in operating income, $101.7 billion in net income, a $6.78 per share for earnings per share, and $106 billion and $797 million for free cash flow. So how does this all look for their valuation? Well, they closed the day, like I said, at $213.07. My discounted cash flow for their bear case is $154.10, $201.01 discounted cash flow for my base, and $263.13 for my DCF on the bull case. My exit multiple is at $205.44. I'm using Microsoft and Google as my comps. And you can see that only the bull case has any upside based on just the combination of DCF and the exit multiple at a 14% upside here. I see some price targets out there from institutions and about the $220 range for Apple. They're a little bit more optimistic on their base case than I am. I'm a little bit more optimistic on my bull case than what they are. But once we take in that margin of safety and we combine these on the weighted average based on the probabilities here, we can see that even with no margin of safety, that surge in price today has put them past the buy price. It's pushed their PE ratio up to 33 and their forward PE to 31.4, both of which are historically more expensive than their 5 and 10 year averages. I do think it's more appropriate for Apple to trade with a 26 to 30 PE than a 20 PE based on their 10-year average here, but 33 is high for Apple. And you can see using a 10% margin of safety, which is my preferred margin of safety for Apple, that buy price would have to come down to about $184.53. That's a forward PE of a 27.2, which again, I think is a very reasonable PE for Apple. And the high PE for Apple would be about 30, as you see in their margin of safety is 0. So like I said, it's tough to predict the kind of growth Apple's going to get, the real growth that Apple is going to get from these AI catalysts. And I think to be valued like an AI company, to get the multiples of NVIDIA or Microsoft, they're going to have to prove it over the next year. We need to see real growth that far exceeds the expectations of analysts and the estimates of Wall Street, similar to what NVIDIA has been doing. Now, I don't expect them to beat like NVIDIA has been beating, but they have to beat significantly more than what they have been to justify a higher multiple than what they're trading at now. That said, Apple will continue to generate very solid returns regardless. I do think there's going to be a little bit more growth than what we see in the last couple of years due to the AI. But if we look at their ROIC, they have an ROIC of 55.6%. That's one of the best ROICs in the entire world. They're returning over 50 cents for every dollar of capital they have invested. And the more they push to their services segment, the higher that ROIC is going to go, because services is very capital light. So we should see very solid growth from Apple regardless, but I am cautiously optimistic going forward with their AI. If they have some banger earnings over the next 4 quarters or so, then my bull case might even be way too low. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.